Hi and welcome to another edition of Weekly Market Report by tradersclub.co.uk. As per usual, let's start with our disclaimer. Anything that we discuss here, it's available in a public domain and therefore it should not be considered to be advice for your trading or investment. We are simply sharing the information for the benefit of the club member. Okay, we can start our report by checking out S&P on daily time frame. We had quite a bit of a consolidation in the past week, but the daily time frame price action actually held that support of 9 EMA, and late on Friday we actually had a breakout higher as well. Currently this 9 EMA rising support moving average at 1507. It's quite significant. Only the loss of that level could potentially indicate maybe the beginning of some kind of reversal or maybe corrective pullback. Otherwise, we would need to respect the prevailing trend and move, basically trade in the direction of it, I suppose. In addition to that rising 9 EMA, we have rising resistance trend line colored in blue here. That would possibly lead us to believe that if the current price action carries in the same direction as it is now, it's quite likely that it can potentially reach 1524, 1530 levels before another resistance is formed there as well. On our intraday time frame, which is a 1 hourly chart, we could see that during the past week we had a sell-offs at the beginning of the kind of trading sessions, and then we had rallies in the afternoons, and that kind of carried on for the whole week, I suppose. And finally we can see that there is a bit of a breakout here on Friday. But the concerning bit is that this breakout happened on a falling volume. Volume was actually quite thin, and usually if you see this kind of breakout, you would expect a stronger rally to follow through as well. But unfortunately that did not happen. The price came back down to retest this previous resistance at 1515, which is now newly formed support, confirmed it on the number of occasions, and it just kind of closed at 1517, which is a new high, but it does look a bit extended and tired, so we'll have to wait and see how markets react on Monday. Intraday, 15-minute time frame. Yet again, we can see a number of candles just consolidating after that breakout. Resistance on the upside for following trading week, starting on Monday, would be here at 1521, which is R1, followed by 1524. Also, that rising trend line that we had in previous charts would be around those levels as well. Alternatively, if the price action returns lower, the loss of this 1515 level would be the first warning sign, and then we would very quickly find the support probably around here, 1512, which is S1 on a daily pivot, followed by 1510, which is a 50-period moving average on 15-minute, and yet again this 1507 level, which we mentioned on a number of occasions, which is a 9 EMA on daily. It's quite a significant support on 4-hourly and hourly, and also on 15-minute time frame. It's 200-period moving average, and it's very close to the S2 as well at 1506.29. A number of levels to support this price on the way down, and obviously the most significant one would be this one at 1495, because we had a fairly strong channeling trading range for a number of trading days between 1500, 1495 and 1515. So these are quite a significant support levels that I would be watching. Gold price action consolidated further. We had a continuous confirmation of this resistance at the 50-period moving average, which is colored in blue. And also we can draw a falling resistance trend line now, which is colored in red on this chart as well. At the same time, we have a rising support trend line. Current price action is supported by 200-period moving average on daily, but it's currently trading below 20 and 50 SMAs on daily as well. The resistance on the upside clearly located here at 1678.95, which is yet again that 15-period moving average, followed by 1687 and then 1695, which is the cluster of these previous highs here, and then obviously this falling resistance trend line. All of those are in play. Alternatively, if we lose the support of this significant 200-period moving average at 1664 level or thereabout, the logical levels for support would be at 1651, followed by 1636, followed by 1626. WTI, or a NYMEX traded oil, actually created a bit of a consolidation and a pullback, which is actually quite healthy because we had a breakout above this fairly significant resistance, and now that's forming a new support, which was indicated by these overbought indicators like RSI, MACD, which were crossing. Histogram was telling us the same thing, and also a stochastics. The price is currently well supported by this 95.77 level, which is 20-period moving average. Also around 94 level, 93.66, 93.76 level, which is this cluster of previous highs and lows, which will potentially act as a fairly significant support. Only the loss of that level could potentially target lower support levels. In a shape of 92.21, which is 50 period SMA, followed by 90.73, which is 200 period moving average, before this rising support trend line comes in play around 89 or 88.70 level or thereabout. Alternatively, if the price moves higher, because Brent was actually moving higher and Brent closed higher while NYMEX was actually consolidating, so the spread between these two instruments is actually widening again, would be around 98.33, 98.24, this previous high and upper Bollinger Band, followed by 142, which is this red dotted line here as well. So those would be the logical resistances. And the last chart that we are checking out today is dollar index. We were looking at head and shoulder pattern, and it's almost like a self-fulfilling prophecy. If too many people see the same pattern, it usually doesn't play out. It's still intact. However, it's very significant to note that dollar index actually found quite a significant support here, confirmed it again around 79 level, and moved swiftly higher. So that could be a combination of things that Mario Draghi was saying, which caused euro to soften as well, and 40% of this dollar index is actually weighed against a euro. So that had a significant impact as well. So we're not really sure if this is euro weakness or a dollar strength, but either way, the price action moved higher, found a support around 79. And it's quite important to say that logical resistances on the upside are located here at this falling resistance trend line around 80 level, 80.25, which is very close to where we are now, followed by 80.86, followed by 80.87, which is 200 period moving average, and also 81.45. Alternatively, if the price kind of returns back lower, levels of 79.82 and 79.72, which is 50 and 20 period SMA, would be logical levels for support, followed by 79.34 and obviously 79 level as well. So all of these levels are quite important to watch as well. This might impact what gold is doing, definitely oil and other currency pairs as well. So I'm keeping an eye on this uh, for my day-to-day trading. Hopefully this was informative. Stay in touch, and I'll talk to you soon.